Hi everybody, this is Lucas Sacerdote and I'm going to be speaking about EOS Energy, particularly an update on their Q4 and preliminary Q1 results. I've been asked to do this video. I've been super busy with multiple things, but I finally had the time to put it together and we've finally had a couple of updates that make this video worth it. So I hope you enjoy it and I hope it brings some clarity to this whole turbulent time that EOS is at. So let's start. EOS Q4 and Q1 2026 results. My main takeaways from their Q4 and preliminary Q1 results is that the company isn't dead. After their Q4 results, the company had a huge drop in the share price and the sentiment and momentum completely evaporated from the company. I understand why. They clearly fell short of expectations, but the operational issues are getting resolved, and my read is that they clearly kitchen sinked expectations after their Q4 miss, and they're rebuilding trust brick by brick. I believe that the long-term outlook in the company hasn't changed. At the most, we have 1, maybe 2 quarters of delays, but this is still a $10 billion company in the making. After their Q4 results, with a 40% share price drop, we've seen over $700,000 in insider purchases, particularly by Joe Mastrangelo, their CEO, with $500,000, and 2 other directors, Dimitri Alexander and David Orban, with around $100,000 each, showing confidence in the company and that clearly the company is not broken. They did have some delays, but the long-term thesis is still intact. Many are still wondering if Cerberus is here to stay or not, what's their exit plan, and if all these operational issues, how Cerberus is taking them. My belief is that Cerberus is here for longer. We can see this from multiple data points, particularly the newly appointed board member in March 26 after their Q4 earnings, where they appointed Nathaniel Frick to the board of directors. Frick is the Chief Strategy Officer for Equities and the Senior Manager Director at Cerberus Capital. He used to be a military guy. He also served as the operating partner at Bessemer Ventral Partners, a huge capital firm, for over 8 years. He used to be a U.S. Marine Corps infantry and is a key player in Cerberus for their defense investments. That's my belief. We can also see how Cerberus appointed Joe Negro as the new chairman. Russell Stildoff stepped down in late 2025. This is particularly in December 22nd, where Russell Stildoff stepped down and they appointed Joe Negro, a high executive with a lot of experience as the chairman in EOS Energy. He used to be the CEO of Constellation, which is over $100 billion company. Moreover, we can see Cerberus doing an additional investment related to EOS Energy, this time in Everzinc. They did previously around a $50 million investment in Frontier Power, which that money went into ordering over 200 megawatt hours of EOS systems, and now they acquired Everzinc in December 22nd, the same day they appointed Joe Negro as chairman of EOS Energy, and 11 days after visiting EOS facilities in December 11th. And this was probably after EOS had their supplier non-performance costing a week of production in late Q4, which was a big reason for their Q4 miss. I believe watching this video of Harsha Kohli, the battery director guy at Everzinc, brings a lot of insights into what we can expect going forward from EOS and continuous improvement in materials that we can expect from the battery side.
I work for Everzinc Corporation. I am their battery technology lead. So I lead all the rechargeable battery materials division, essentially on the technical side. So like a technical architect, if you can say, on generating the next solution to our customers on rechargeable zinc batteries. So that's our main focus area, or my main focus area within the company. We are one of the largest zinc supplier in the world, or I would call it usable zinc supplier, right? We are not miners, but we convert that mined material into a usable zinc in different forms, like zinc powders, zinc oxides, alloy powders for battery grade materials. So all that is part of our portfolio. Of course, we are developing specifically rechargeable grade zinc materials that can cycle more, the utilization is better, that can suppress dendritic growth. 3 technical challenges with the zinc anodes, right? That's our main focus right now, to create materials that deliver on those 3 major things. If you look at zinc batteries as a whole, one of the major losses that occur is dendritic growth, right? So we have additives within our materials that actually suppress the dendritic growth, right? And there is passivation that occurs within while you're cycling the zinc batteries. Again, our structure and additives with the zinc powders help with the reduction of those issues, right? So we are the anode side of the equation, right? There's also electrolyte and cathode and separators that also play as a system. What we are focused on is how can the anode make the difference? It can. Like, what is the breadth we can improve it?
My belief is that Everzinc is if not one of the anode providers for EOSE Energy. We know the electrolyte provider is Tetra Technologies, and I think we are not yet aware of who the cathode provider is for EOSE.
And we only think about high volume. All our plants are 25,000 tons, 30,000 tons. So we are ready for where this battery is going to go, right? That's who we are. We are already supplying to the primary battery industry about 30,000 tons or 25 to 30,000 tons. So we can supply more than that to the rechargeable industry once they are ready for taking up that material. So if you look at battery developer, they have so many things that they need to work on to make something that is commercially viable, especially in the ESS space or the data center space, right?
Interesting that he's already mentioning the data center space for zinc batteries.
You have the electrochemistry part, which is anode, cathode, separator, electrolyte, all things that go into the cell, and then you make it into a block of modules, and then you make it into a pack, and then you have a battery management system, which for zinc is different than your standard lithium system. So you need to develop your own system for the world.
We already are very aware that EOSE Energy had to develop their own battery management system, and that it has played a key role in being one of the main bottlenecks in scaling operations in the field.
Digital voltage range you're operating on, and then you have to work on systems, and then commercialization, scaling, production. There's so many aspects of the industry, like of the battery developer's workload, that is too high for them to concentrate on improving, let's say, the anode, or improving the electrolyte, or improving the separator.
It really feels that he's talking about especially EOSE Energy, and with all this complexity we need to be aware, 1, that it will take time, 2, that there will be hiccups, and 3, that if they are able to achieve all these pain points, the vast majority of the profitability will flow to EOSE Energy.
Technically, if you do all of that by yourself, it's going to take about 10 to 12 years, right? What can we do as a supplier, and what can we do as suppliers all together as a group, collaborate and bring the timeline to maybe 5 years, right? How can we improve on the electrochemical side? What can we give them? What can we give the developers, like tools to play with, so that they can improve their product and accelerate quicker to commercialization? Instead of focusing on that, they can focus on commercialization, production, scaling, right? All those are bigger challenges to solve as well. So just balancing that act. As an industry, we are able to get only 20 to 30% of the utilization out of our zinc, but we can improve that, right? Even 5% change at a system level will give you a drastic improvement in the total energy of the or total levelized cost of storage. That's the term that we keep using. So that'll be reduced substantially, even with a small change in the utilization of anode material. So that's our perspective. And of course, there is electrolyte perspective, separator, cathode perspective, which is different. But that's one key point, right? How structures can play a key role, how change in material shapes can play a key role in the process, in the performance, improve the whole output altogether. So that's the approach that we see as zinc material supplier.
Important to note how I am expecting continuous improvement in the material science of EOS Energy that will result in lowering the levelized cost of energy long term, and that this levelized cost of energy will not remain static once they achieve scale, because all these scientists are continuously working on how to improve that material structure, that composition of chemicals to improve the battery performance and reduce the cost.
Battery is a system and not just one component of a system. Octet is the electrolyte part of the system. When I talk about collaborating, Octet is the electrolyte, we are the anode material supplier. Those two need to talk to each other, right, as a system to work properly. Additives play a very critical role in actual net performance of the cell and stability of the cell. So that's where I see, I'm excited about Octet, bringing up those challenging solutions. Even small minor improvements on a whole at a system level will give you a large change. Net output will be much higher. So, and Octet being a molecule company, they're focused on that to make that big change with small molecules, right? That's the exciting part about working with Octet, or about their technology itself.
So this video was brought to my attention through the Hip Skipple. I highly encourage everyone to follow him and everyone that I will mention in this presentation. I try to put the X post and their handles so that people go and follow them if they're interested in the company, because this is a community effort, this is a team effort, and I'm incredibly grateful for everyone with their jobs that they're doing in helping with the due diligence of EOS Energy. So what were the Q4 results and the main insights and takeaways? First of all, the operational results. They clearly fell short of their target. Their target was around $90 million for the quarter, and they did $58 million. They were severely punished for it. They owned their mistake, clearly. This is a John Mahas quote from the transcript of their call. If I'm going to speak candidly about where we're operationally, first, a real progress to acknowledge, but we completed the subassembly automation, making the battery line fully automated, but we fell short of operational targets, and that's on me. Joe Mastrangelo did a similar thing. He clearly took responsibility for their mistakes, very similar to the ContainerGate episode that we had at late 2024. Again, that too, the stock price took a huge hit because of it, but that was the right thing to do. They acknowledged their mistakes, they turned the page over, and then they started to rebuild trust brick by brick. There were 3 clear explanations for their operational results. There was a supplier non-performance that caused a whole week of production. The bipolarity production quality was harder to achieve and took longer than when they initially thought, but this was greatly resolved in Q1. And the downtime was of 35% instead of the 10% that they were expecting. This was probably impacted by the supplier non-performance, by the bipolar production, and also probably because of weather conditions, workforce not being there available, and probably multiple other items played a role here. And how was Q1 so far? When they did their Q4 earnings call, they said we had a path to world-class performance. The resulting learnings, actions, and executions are my responsibility. This is John Mahas taking responsibility. They are identified single points of failure in the system, and all these efforts have driven higher quality, repeatable, and predictable operations in early Q1. Software is one of the main bottlenecks, but we've seen them relentlessly working on this, and we already saw a new patent being filed and a white paper which was with this EOS tweet. The patent that was filed was very similar to the first C3 patent when they changed the composition for zinc bromide to zinc halide. This seems to be taking the same approach. They already filed the patent, which means it's being operational in the field right now. We see that C3 product has discharged around 300 megawatt hours of power, which might seem a lot, but it's not. If you have a regular sized system operating day in and day out, that number should be way higher. And the reason why it's not way higher is because of the software, most probably. I'm speculating here. But we already saw EOS Energy talking about their battery management system and all the progress that they've been doing. This is Pranesh Rao, their senior VP of software. This is Pranesh Rao at the RE Plus conference in Las Vegas last September of last year. That's me, where he explained the battery management system and the progress that they wanted to achieve, which seems that they're doing it as we speak. And it's very important to know that all this progress is resulting in that the systems no longer need to be oversized. They no longer need to dispatch technicians to service all these systems on the field, and the downtime servicing, it's greatly diminishing. This is resulting in an energy loss less than 1%, which seems to be a new benchmark. But what's most important is that all this cost will be flowing to the bottom line for EOS Energy. In the past, all this represented a cost that eroded profitability and needed to be addressed, and it seems like they're in the right path right now. What's very clear is that clients want a full system. They don't want just batteries. They need to be operationally easy to handle. And this is where Indensity comes in, and also their battery management system. They needed to address 3 key points: the serviceability through the battery management system as well, the cost, and the site energy density. So Indensity helps a lot in both 3 key elements. This is Indensity. These are how they marketed. I'm sure many of us have PTSD from all the hype that was around it, but it clearly showed the 4 major areas where Indensity will play a role going forward: data centers, dense urban areas like New York, microgrids and military bases, and industrials and refineries. Also, Indensity is not only able to achieve a 1 gigawatt-hour order of energy density per acre, which is 4 times the best energy density that lithium-ion systems are able to achieve, because they can stack one cube on top of the other. Core, I should call it, not cube. Cube is the old configuration. Indensity is Indensity core. They can stack up to 12 Indensity cores on top of each other because they are non-flammable, which lithium-ion systems cannot. It's not only that, but it also makes it simpler to manufacture and easier to service as well. Going into production progress, line 2 has already achieved factory acceptance test at the Accra facilities, and is expected to achieve site acceptance test by end of Q2, where they will begin production. It's important to note that we're going from 2 miles of this material flowing in the current configuration to less than 1,000 feet. And this is the video that should give you goosebumps if you're invested or considering investing in EOS Energy. Look at all those robots moving in synchronization, which should result in a cycle time even less than 10 seconds, which was what we had with line 1 prior to containerization. The main change with line 2 from line 1 is containerization. How the battery module was produced, I believe it had significant progress, but the main progress is containerization. It's how all those battery modules, all those tubes are put into the container, which used to be the EOS cube, and going forward with Indensity, it will be the Indensity core. Previously, they had to travel from one factory to another, and with line 2, it will be a single piece flow through, which should result in a step change in manufacturing capacity and in profitability. So one of the main pain points for the investor community was the guidance that they gave, which they committed to doing between $300 and $400 million in revenue. My belief is that they clearly kitchen sinked expectations, and it is very clear what they said. It's that guidance reflects what we believe we control as of today. what we believe we control as of today. And my interpretation of all this is that the guidance is the already committed backlog for 2026, and this is what depends on them, their production capacity. And as orders comes in, if they do, this guidance will get updated, because this is tied at the hip with the difference between the guidance revenue and the guidance capacity. They also guided for 4 gigawatt hours of production capacity coming out of 2026. That's in line with customer requirements that we have. So does this mean that they have customer requirements around 4 gigawatt hours of delivered orders for 2027? If so, that would equate to closely to $1 billion in revenue for 2027. And this is what they always been saying, bringing capacity online as customers demanded. So this guidance capacity of 4 gigawatt hours coming out of 2026 doesn't clearly match the $300 to $400 million revenue, which would equate around 1.5 gigawatts of delivered orders in 2026. I believe that 1.5 gigawatt hours orders for 2026 is what is already contracted. And if we do have orders coming in, this guidance will get revised, and we'll get into that soon. Also, in the Q4 earnings call, they said that Line 1 had achieved a 100% capacity, the nameplate capacity coming out of 2025. Usually, these statements means that they had achieved 1 day of being able to do the equivalent of 2 gigawatt hours for that single day. So if we multiply that production of that single day by 365, you would get 2 gigawatt hours of production, which usually it's not realistic, because that probably is one great day, and having the factory running at 95% utilization rate is extremely hard. But what it means is that the equipment is able to produce 2 gigawatt hours of production if you run it steadily the whole year. And finally, with the guidance that they gave for Q1 was that they're gonna do fairly similar to what they did in Q4, and the main takeaway here is that they said we're delivering to customer schedules. So what did they actually do in Q1? We already got these results, and they did around 56 to 57 million in revenue, which is as they guided just 1 month before. The main takeaway here is that they recorded quarterly shipments increasing 17%, and the battery output increased 10%, and the bipolar output increased 10%. My interpretation here is that operations are improved, and they deliver to customer schedules, which means that the main bottleneck today is not production, it's customers' ability to take delivery. So how can we think about customers' ability to take delivery going forward? Well, I think we can confidently say that they have between 300 to 400 million of contracted orders for the year, and those orders could increase if additional customers comes in. One of the main possible contributors to additional orders coming in for 2026 would be the NYSERDA projects for New York. This, as Joe said here, these NYSERDA projects, when approved, would, as part of their bulk storage, would go into delivery almost immediately. And these projects are scheduled to be approved in late Q2, so just 1, maybe 2 months away from now. And this represents over 3 gigawatt hour orders just from NYSERDA. So if these orders do come through, which I believe they have a very, very high chance, that revenue number of 300 to 400 million could get bumped by 100, 200, 300. They have over 3 gigawatt hours orders in NYSERDA, so this could represent over $750 million in revenue. How those would be distributed between 2026 and 2027 remains to be seen. But that $300 to $400 million revenue guidance could look very conservative going forward, which is what I believe the team wanted to do, to be extremely conservative and to beat that guidance for the first time in the company's history. These NYSERDA projects consist basically of a 2.4 gigawatt hour order for the Brooklyn Navy shipyard, that it's a 300 megawatt order and an 8-hour duration, which is a huge project. And this consists of an Indensity configuration. So it would be the first time, one of the first times, we don't know if there are other customers, but one of the first time where the Indensity core would would be delivered in the field. And this is the biggest energy order in the most important city in the world, playing to the strength of EOS, being right next to a hugely dense area with an energy density configuration that no other battery technology can achieve. So this is EOS's most important project going forward, as we know now. That could change, hopefully, but this system could represent a step change in the company's history. We also got an 800 megawatt hour order from EIP, and a 160 megawatt hour order from AES. And here we have DM Modco saying that the NYSERDA language was updated, saying that the bid proposals concluded in February 2026, and that NYSERDA will publicly disclose the results of the solicitations upon the completion of contracting. So, staying in the topic of possible big orders going forward, I believe that AES will be one of the main data center customers going forward. We need to do a couple of dot connecting to reach this conclusion, but I believe it has a high probability of eventually happening. First, in the Q4 earnings call, they did say that they were working with a global power company that is looking to install one of their C3 systems in a national lab, and that they're actively working on large-scale opportunities with this customer. So this is a very meaningful project to show the C3 performance. And the same customer that is integrated in the national in the national labs has a project in the NYSERDA bulk storage program. So there are three main possible developers in the NYSERDA bulk storage program, but the most probable global energy developer is AES. It's either AES or EIP or Halmar, but neither EIP nor Halmar is a global energy developer. AES is the most probable one. So AES is integrating one of the C3s into a national lab and has a bulk storage program. And it's very important to know that AES was the developer chosen by Google to develop the new data center energy agreement in Texas for Google. And they will look proactively to pair new clean energy and generation capacity through power-first approaches in collaboration with AES. So AES is one of the preferred developers by Google to develop data center energy. And we know they're actively working with EOS in the NYSERDA bulk storage program, and are integrating the C3s into a national lab to speed up their data field and conviction in the C3, so that they not only rely on the NYSERDA project, but that they can gain conviction sooner to deploy them in these large-scale opportunities they're seeing, hopefully in the Texas alongside Google. We already know that Tetra was taunting about a possible huge Texas opportunity for EOS. It's not something shocking because most of data centers are being developed in Texas, but I think this speculation can hold its ground going forward. Of course, this is all speculation, but connecting these three dots doesn't seem so mind-blowing. The backlog is growing, it's healthy. We need backlog converting into orders, but there's healthy diversification. We already have 700 million in the backlog contracted orders. PGM is going in the right direction. We already have a huge MSA agreement with Talon. Beamergen, which we never attributed any seriousness to it, has come out and placed a 400 megawatt hour order for the Redbird project. And this whole backlog, this is a great work done by Bert Guilfoyle, it basically adds up to around 100 gigawatt hour orders, possible orders. So let's dig quickly into the 2025 10K insights. First, customers in 2025. It shouldn't be lost to people that EOS did over $100 million in revenue for the whole 2025. That's not small, that's scale. They're the first non-lithium technology to achieve scale, which is extremely meaningful. Yeah, they did fall short of their $150 million target, but they did $118 million, which is significant. Looking into the 10K, we can see that two individuals accounted for over 50% and 19% of total revenue. This is easy triangulated to Frontier representing the 18.8% and City Utilities representing 51.5%, which is around $58 million. The whole order for City Utilities was $73 million, which makes sense because it would explain that $14 million are remain to be booked, and this would signify that they booked 80% of the revenues upon delivery and the remaining 20% once it's commissioned. They have around $45 million in remaining performance obligations, 83% to be recognized in 2026. This is most probably commissioning services from City Utilities and Frontier. One of the main things from the 10K is that they no longer have going concern. They have extreme liquidity. They have around $600 million in liquidity, $565 million in cash and working capital, and $56 million in restricted cash. So over $600 million in liquidity. That would equate to more than 2 or 3 years of runway, even if they're at a loss making for way more than it's expected. So the company no longer has a going concern. They have a healthy balance sheet and they're here to stay and dominate. The Q4 financials breakdown, this was an incredible work done by Ugur Seeker. I encourage everyone to follow him. The main takeaway here is that long-term profitability remains unchanged after clearing the noise from Q4, and that delays can always happen and that it should be expected. Basically, what Ugur Seeker tried to do is, if we took out the supplier non-performance, the downtime, and the underutilization, we would reach to the conclusion that if they produce $90 million of products worth, the company would be gross profit break-even, basically, at a subscale. Once we scale, we should reach over 20% gross margins, in my opinion. In the 10K, they still talk about 8 gigawatt hours of production by 2027 under Project Amaze, so that hasn't been modified. And this, I always have to talk about this with people that are not as fluent in the company, but the contractual obligations or their debt, it's around $1.2 billion, but everyone needs to know that the Cerberus delayed draw term loan is a convertible. The equipment is basically meaningless. The DOE loan facility is the only debt that they have, which is extremely cheap, and they have 2 remaining convertible notes, which are exactly that. They are convertible to equities. So yeah, they're not equity exactly, but they're not debt exactly. So basically what this means is that actual debt is around $120 million from the DOE loan facility, which has an expiration of over 2030 and an interest rate under 5%, which is extremely cheap for a company in EOS size and maturity. Also, the fully diluted share count is around 600 million shares. That is something that people need to keep in mind. The 337 million shares that are outstanding today, they are misrepresenting facts, in my opinion. I mean, that's the truth, but we also have to take into consideration the Cerberus convertibles and the convertible notes. If we do all that, we should arrive at a 600 million shares outstanding. So that's the number I'm using for a fully diluted share count. What are the catalysts that we can expect going forward? The NYSERDA projects being approved, the UK cap and floor, which is over 10 gigawatt hours of possible orders, Cerberus lockup and what they will do after the lockup expires in June, which I believe they're here to stay, any IEP orders, any data center orders, especially regarding AES and Google, that would blow my mind, any other orders, and additional field data. NYSERDA projects, we already covered them, over 3.3 gigawatt hours in orders that would be going to delivery almost immediately. The UK cap and floor programs is over 10 gigawatt hours in the pipeline, and it's only one of 2 technologies with possible domestic manufacturing. That should play a huge incentive for Ofgem regulators in the UK. The Frontier EOS partnership opens the door to developing local manufacturing in the UK. Should significant LDES project volumes materialize using EOS technology, it could incentivize the establishment of manufacturing operations in the UK. supporting domestic supply chains and job creation. That is extremely important. I mean, the UK has no domestic supply chains for their energy, and EOS Energy is one of two technologies that could support this domestic manufacturing alongside Indensity. Here, from 99 Lost Capital, he put a screenshot saying that Ofgem's initial decisions selected projects are due in April, so basically as we speak, and the final awards are due in the summer, so only a couple months away from actually knowing what the final awards for the UK Cap and Floor program will be. Then we have IEP, which we know IEP uses EOS's technology, and they have over 20 gigawatt hours in the possible pipeline. The Hummingbird project we hear is the technology stated as natural gas, but we already know that they are planning on using 1.8 gigawatt hours of EOS's technology. But we also have Desert Wren with 12 gigawatt hours. We have Camp Pendleton, which was already awarded for 400 megawatt hours with a commissioning date of 2026. They have another 500 megawatt hour order here. They have a 400 megawatt possible order from Choke Point, another 400 megawatt hour order from Mitchell, and a 1.6 gigawatt hour from SDG and EBS. So IEP has been a long-term partner and a repeat customer of EOS, and they have over around a 20 gigawatt, I don't know if you add all that, 15 gigawatt hour pipeline using EOS's technology, and particularly a 1.8 gigawatt hour order in Hummingbird, which would be for a data center, which we already know that they are planning on using a 1.82 gigawatt hour orders of EOS's batteries. I already covered this in the Q3 update. We also have new projects that are coming to our awareness. Great work by Spearfishing Capital, that he found a 615 megawatt hour order in California. We were not aware of this until he brought this up to our attention. And also by Spearfishing Capital, we were made aware that EOS is also among the technologies to be used in the Marine Corps Air Station in Miramar. This shows the dominance of EOS in the long-duration energy space. And from the California Energy Commissioning LDES program, of all these projects that they funded, Valley Children's Hospital uses EOS technology. Pacific Steel Group, EOS. Naval Base in San Diego, EOS. Marine Corps in Camp Pendleton, EOS. Rapid Integration and Commercialization Unit, which is the Miramar, EOS. Pesenta Band on Community, I don't know what it is. Form Energy, this is not EOS. And Viejas Band is EOS. So the dominance in EOS in the long duration energy storage California Energy Commissioning program is incredible. I don't know, over 75% of projects were attributed to EOS. This is just some macro anecdotal evidence, but of all the projects that are awaiting interconnection, storage is 30%. Of the projects that are to be set into interconnection, of the delayed projects, only 4% are storage. So storage is clearly among the less delayed technologies out there, at least in MISO. But I believe this is a trend that will keep going in the whole US because of the ease and the speed and the importance that storage brings to the US grid. This shouldn't go unnoticed, but and it represented over 50% of EOS's 2025 customers. But this is the City Utilities project that's worth over $73 million, and look at how beautiful this is. This looks like a Tesla Megapack battery energy storage project, and it's an EOS one. It's the first EOS large-scale project. Great work by Austin capturing this. This is beautiful. We also saw that the scrap from Q4 was sent to Acro for them to test the line 2. Here, if you zoom in here with enough quality, you would see that here says scrap for Acro, something like that. And from a macro perspective, we've seen in April 10th, Carlyle, one of the biggest money managers in the world, choosing batteries. Bonus, batteries come out on top. If Curry could put all his money into one technology, it's batteries. The military case, the grid cases, and the security case all converge on storage. And who's the storage manufacturer that has the biggest advantage in military cases? EOS. Grid cases, everyone, EOS too. And the security case, EOS. So I don't know if he's aware of EOS Energy, but it would clearly be among his top plays for 2026. We already all know this, but one of the major AI bottlenecks is shortage of electrical equipment, which is transformers, switch gears, and batteries. This is from Bloomberg. And refreshing our minds, we're all very concerned about the Iran war, which dominates all the headlines. But thinking about the pre-war world, Trump was basically forcing major hyperscalers to build and pay for their new power plants, and they are banning Chinese cells. Also, data centers, they would signify a national security asset, so placing Chinese cells in them seems fairly unlikely. And just bringing this up again, this is just one of many examples of a hyperscaler paying for its own energy generation through Google under AES collaboration. I need to bring this up. I'm annoyed by the unresponsiveness of EOSE's IR under management team. I did email them multiple times, and after the third time and over 2 weeks after my first message, I got this vanilla email from investor relations saying that they don't have time to talk to me. I mean, I've talked to multiple management teams. I talked to them on a Saturday, on a Sunday. I find it very hard to believe that they don't have 30 minutes of their time to talk to an active investor that's a cheerleader for them, that has taken the time to go to their factories, to go to events to them, to talk to their employees. You don't have 30 minutes of your time whenever you want to talk to me. I don't know. It bothered me, and they're clearly inaccessible to almost anybody. But I needed to bring this up, even though I'm their biggest cheerleader. They are incredibly unresponsive. So Joe, if you're watching this, whenever you can, whenever you want, I'm happy to adapt to all your schedules, but I would greatly appreciate if we could speak for 15, 20 minutes, get to know you, speak to you face to face, even from a Zoom call for the first time. I would love that. So we're reaching the conclusion, but felt deliveries remain on track. We've continuously seen them importing felt, signifying the production is ongoing. They're probably stacking felt, because if per Bird's calculation, around half a ton of felt is consumed per cube, and it shows that probably EOS is stacking up felt in inventory. We should also account for some scrap, but they're clearly stacking up felt in inventory, probably to get better pricing, to support the ramp up of their felt supplier. But this signifies that production remains on track. And at 300 tons per felt per quarter, this should translate to around 600 megawatt hours of worth of cubes per quarter. So that should translate to around 2.4 gigawatt hours of production per year, so over $500 million in revenue, which again, it doesn't match the $300 to $400 million in revenue guidance, but that can be explained by their over-conservatism, and that these $300 to $400 million, they signify the already contracted orders for delivery in 2026. And going to a quick Excel just to wrap things up, my belief is that EOS is a plus $10 billion company in the making. I had to update these numbers because production fell short of my expectations, but even at extreme conservative estimates of 65% utilization in line 1 and coming out with a 25% utilization of line 2, this should translate to $370 million in revenue at a $200 average selling price, which is, I believe, lower than we are actually going to see. And most importantly, this shows 1.8 gigawatt hours of orders and deliveries for 2026. But this probably doesn't take into account the 3 gigawatt hour orders possible from NYSERDA and many other multiple customers. So even if we were to add 1 gigawatt hour order from NYSERDA to be delivered in 2026, that would add over $200 million in revenue, and this 370 million should get bumped to over 500 million in 2026. And I'm saying, well, in the long term, I'm expecting the whole profits to be coming from the production tax credits. This is clearly an over-conservative assumption going forward, But it's what we're seeing in the solar industry with First Solar, for example. They sell their hardware at cost and they keep the whole tax credits as profits, even assuming this incredibly conservative profitability. You would get to $400 million in profits in 2028 and around $600 million in 2030. And this would signify 13 gigawatts of production, which I believe it is very fair to assume over that, around 20 gigawatts. If we were to put 20, we would have over $900 million in profits. I'm putting a price to earnings multiple of 25, seems conservative here, especially given their growth. So this is just an example to show that even with very fair assumptions, you could expect EOS to be over a $10 billion company. The main assumption here is volume and this demand, which will signify 40 gigawatt hours materializing, which I believe it will. That's basically my conclusion, that EOS, the long-term outlook for the company remains intact, that EOS continues to be a $10 billion plus company in the making, and that my conviction, while it is annoying to see delays, they should be expected. They are expected on my side. We're going to continue seeing them. They are doing an incredibly hard task, but as long as the company continues executing and relentlessly going forward, my conviction remains unwavered, and I continue to be a long-term supporter and investor of EOS Energy. So this is a standard disclaimer. I hope you enjoyed it. And I continue to be a long-term investor of EOS Energy. I continue to support them. I continue to be impressed by the company's execution and relentless efforts going forward by their team, John Mahas, Joe Mastrangelo, especially Cerberus too, which is appointing all these high-quality people to the company. And yeah, sentiment is in the trash. Major headlines are dominated by the Iran war, which, same as the tariffs last year, during tariffs last year, EOS took a huge hit because it's a high beta volatile stock, but high tariffs would signify a moat and an improved fundamentals for the company, and that took the market a while to realize, but eventually it did, and it pushed the share price from $4 a share to $19 a share in a couple of months. I believe a similar situation is playing out with this Iran war. Yeah, everything is taking a hit. If you're a high growth, volatile, high beta company, you're taking a hit. But fundamentally, the company has never been stronger. Fundamentally, every country is looking for robustness in their energy supply chains. And the value proposition that EOS is bringing to the table has never been stronger and sounder and easier to understand for everybody. I believe the war should end fairly soon. I believe if it's extended, the value proposition of EOS continues to increase. But even if there's a resolution tomorrow, which I'm praying it will, but even if that happens, the value proposition continues to be there, and that people are awakening and they need to find redundancy and they need to increase robustness in their energy supply chains. And that will lead to an excess profitability for companies delivering on this pain point, such as EOS is doing.